Recently, Trump has launched a 50-year mortgage plan, and a lot of people have been very excited about it. But is this really as good of a plan? So in this video, we will discuss some numbers, and I will also let you know what I think about this plan personally. So first, to understand 50 years, we need to understand 30-year mortgage, the normal one which most of the people have been taking benefit of from all these years. So most of these mortgages are amortized in a way that they are front loaded, which means for first 8 to 10 years you are mostly paying interest rates and very minimal is going towards your principal. So therefore the equity start building after 10 years, and surprisingly each buyer only stays around 12 years in his home. So which means at a point where he's starting gaining some equity, he decided to move to another property. So that's a story of 30 years. But now in this 50-year loans, the amortization's gonna be front loaded for almost 20 years, which means for first 20 years you won't be paying a lot towards the principal and you won't be gaining any equity. All you will be doing is just making an interest payment. So what I think here is, how is it even different from the rental market? It's like renting a home, but here you're just renting it from the bank and making the interest payments. That is all about the equity. But now let's talk about the payments. For example, if you end up getting a $700,000 loan at 6.5% interest rate, which is today's normal, your monthly payment is looking around $4,420. But let's say you decided to choose this 50-year loans, your monthly payment will drop to $3,900. So that's a $500 difference, which might gonna sound good, but the problem is the completion of the loan. In 30 years, if you, let's say you complete a loan in 30 years with this interest rate and making these payments for 30 years, your house will cost you around $1.5 million, which is more than twice of the home price when you buy it. But now if you are stuck with the payment for 50 years, the same house gonna cost you around $2.4 million, which is almost $1 million more than a 30-year payment. So where you were only saving $500 a month, there you will be paying $1 million on a course of the life of the home loan. And another thing you need to keep in mind, 50 years is a lot of time. If someone is 35 today and he's buying this home, he will be 85 when the house will be free. So I don't think so you will be making any equity unless something extraordinary happens, like it happened in 2021 where the house's prices just skyrocketed and you end up gaining a lot of equity. That's a totally different story. But other than that, it doesn't really feels like a great financial decision. I personally feel like even the 30 years loans are a little hard on the pocket, but this 50 years is straight no. It's better to buy a smaller home which you can afford for 30 years rather than buying a bigger home for 50 years. What you feel about this loan, please write in the comments.